Hey game changers, this is Grant. Apple just launched iPhone 13 and for the past few weeks it pulled back more than 10% at its lowest price on September 20th. I think it's the perfect opportunity to buy some Apple or even add more to your portfolio. To understand Apple's financial health and growth, we need to know where Apple's money came from, where it went, and where it is now. There are four basic financial statements: income statements, balance sheets, statements of shareholders' equity, and cash flow statements. In this video, we'll focus on income statements first. If this is your first time looking at financial statements, don't worry about it. I'll explain everything in the simplest way possible. Apple, ticker AAPL, is the biggest company in the world by market capitalization, according to Statista.com. And you can see here that Microsoft ranked number 2, Amazon ranked number 4, and Alibaba ranked number 9. I think everyone should have some exposure to Apple in their portfolio because it is a very profitable company, if not the most profitable in the world. It has a variety of devices and services that are very popular, and its $2.2 trillion valuation represents about 10% of GDP for the US and about 7% of the S&P 500, according to Professor of Finance at the University of Maryland's Robert H. Smith School of Business. iPhones can be found everywhere around the world. It has revolutionized the way we live. Now, let's look at Apple's consolidated financial statements, and I believe after looking at this, you will agree with me that we should buy some Apple stocks. Right here, we have Apple's condensed consolidated statements of operations. So basically, statements of operations, that's the same as income statements. And you can find this if you Google Apple financial statements. It's going to take you here, and all of their Q1, Q2, Q3 financial statements, they're all here. We have 3 months ended, 9 months ended. Different companies have their fiscal year set up differently. Some start in January, some start in March. Apple's fiscal calendar starts in October, so its Q1 is October, November, and December. Q2 is January, February, and March. Q3 is April, May, and June. And Q4 is July, August, and September. Unfortunately, its Q4 financial statement won't be available until late October, so we'll have to look at its Q3 financial statement for now. I'll make another video when its Q4 financial statement is ready. Statements of operations or income statements. It records the income and the expenses of the company for a particular period. In this case, we have 3 months ended. This year is 2021 and last year 2020. And last year is included for comparison purposes. And we also have 9 months ended here. Again, this year and last year. So that's just for comparison purposes. For us, we will focus on this part right here. We have June, May, and April. Net sales. This is where Apple gets its money, and all of these numbers are in millions, except numbers of shares which are reflected in thousands and per share amounts. We'll talk about that later. For example, this number is 81,434 million. That is this number right here. To make it easier, I will just say it's 81 billion. This would be 40 billion. Here we have products. That is all the iPhones, iPads, iWatches, and all of its Mac computers, basically all of Apple's hardware products that they sell. Net sales figure is gross revenue minus the returns, allowances, and the discounts, and that is almost $64 billion right here. Services, that could be Apple Care, cloud services, Apple Music, iTunes, and all of its sales from app stores and etc. And that is $17 billion. And the total net sales is $81 billion. This number is insane. Imagine that you sell 81 billion worth of products and services in just 3 months. And in 9 months, starting from October 2020 all the way to June 2021, that is $282 billion. So that's a lot of money right there. If we compare this number with last year's, you see that there's definitely growth, and the growth is good. From 64 to 63, from 13 to 17 right here, and the total is from 59 to 81, and the 9 months is from 209 to 282. The growth is beautiful. To make everything easier to read, I'm going to use variables, and you'll see why later. If we say products is A, services, let's say it's B, total net sales, that's A plus B, it equals to C right here. I'm going to put another C right here. It's going to be a little bit easier later, and you will see why. On the cost side, we have 41 billion, almost 41 billion here in products, and 5 in services. And if we use the total net sales minus the total cost of sales, we have our gross margin, and that is 35 billion. This is a very beautiful number. And if you look at 9 months ended, and that is $117 billion. And with all of this money, they can reinvest in themselves, put it back to research and development, pay its employees dividends, and acquire more companies. Currently, Apple owns approximately 114 companies with an approximate value of $8 billion. Now let's put our variables here too. Cost of sales for products, let's say that's D. Services, let's say that's E. And total cost of sales, that would be D plus E. And let's say it equals to F. I'm going to put another F in the front. And right now, if we use total net sales, C, minus total cost of sales, that is F, C minus F, that equals to G. I'm going to put a G right here as well. So basically, if they are profits, some kind of revenue, I'm going to use green. And if it's some kind of costs, I'm going to use red right here. And now we have research and development, and that is R&D, selling, general, and administrative. This is also known as SG&A or SGA. This includes all the costs not directly tied to making Apple's products or performing their services. However, it includes the costs to sell and deliver products and services and the costs to manage the company. We can see that this number is going up a little bit on a year-over-year basis. We can see this from here, 4.7 to 5.7, 4.8 to 5.4. But the total net sales and the gross margin, 35, 81, are both growing from the same quarter last year, 59 to 81 and 22 to 35. But R&D and SGA increased only by 1. So I think this is absolutely normal and acceptable. The total operating expenses figure is $11 billion. Because these are operating expenses, I'm going to use red right here. So let's say R&D, let's call it H, SGA, let's call it I, and we have H plus I equals to J. Let me put another J right here. And this is the total operating expenses. And now we have operating income, which measures how much of Apple's revenue become profits. Because if the costs are too high, it will leave you with less or no profits. It's basically the income for operating the business. It is similar to a company's earnings before interest and taxes, and is also known as the operating profit or recurring profit. Understand operating income is helpful to investors because it doesn't include taxes or other one-time expenses that might skew the net income. And if a company's operating income is increasing, it means that it's making money while controlling all other expenses and costs. other income, this is from activities unrelated to Apple's main business. I am guessing one of them could be income from renting their computers to schools, universities, hospitals, or some research facilities. And that figure is 243 million. It's a very small part of their income. And if we add these two right here, we get income before provision for income taxes, which is also known as earnings before interest and taxes. And we also have our provision for income taxes, which is the estimated amount of income tax that Apple is expected to pay for the current quarter, which is Q3. Of course, we have our net income, also known as net earnings. This is also referred as the bottom line due to its positioning at the bottom of the income statements. So basically, gross profit refers to a company's profits earned after subtracting the costs of producing and distributing its products, whereas net income is a company's profit after all of its expenses have been deducted from revenues, and a net income is a great metric for profitability and provides insight into how well the management runs all aspects of the business. In this case, Apple does it pretty well. And you get this operating income by using G right here minus J, the gross margin minus total operating expenses. So we have G minus J, and let's call it K right here. And the other income, let's call it L. So income before provision for income taxes, that will be K plus L, let's call it M right here. Provision for income taxes, and that would be N. And for net income, we have M minus N, and let's call it P right here. And one interesting comparison is that Nike's net income in 2019 is $4 billion, and in 2020, it had only $2.94 billion net income. And of course, a lot has to do with COVID. But Apple, in 3 months, its net income is $21 billion. So you can see the huge difference here and how valuable and profitable Apple is. Now let's look at earnings per share or EPS. We have a basic and diluted. They are calculated differently and is widely used to estimate the value of a corporation. It is a measurement of a company's profit. It is always better to calculate both of them. The formula to calculate these EPS are here if you are interested. Generally speaking, a higher EPS indicates a greater value because investors will pay more for a company's shares if they think the company has higher profits relative to its share price. And you can see that it increased from 0.65 to 131, but the number can be manipulated through actions such as buybacks. Apple did buy back its shares, so of course this number is higher now. And another reason is that they think the share price is undervalued. Now, let's look at last two parts. This is net sales by reportable segment, and this is net sales by category. You can see that the total net sales right here, they are the same. It's 81, 434. It's the same as before. Total net sales, they are exactly the same. Also, we have Americas, Europe, Greater China, Japan, and the rest of the Asia. And all of them, they have different numbers. And right here, we have iPhone, Mac, iPad, wearables, home, and accessories and services. And of course, this services is exactly the same number as before. Right here, you can see that. And iPhone, you can see right here, is a $39 billion. And that is Apple's main source of income or profit. So this is how you read income statements, and it appears that Apple is still very profitable. And I think it's something that all of us investors should have some exposure. Well, don't put everything you have on it. Always diversify your portfolio. If you have any questions, leave them in the comment section. If you find this video helpful, like and subscribe. This is Grant. Trade and invest responsibly.